Okay, good morning, everyone. My name is Josip Kasik. Today is March 15th, 2022. Tomorrow is a big Fed day. Um, I'm going to show you here the slides that show the disclaimer. Please take a moment to read it. We are not financial advisors. Um, all the trades that we're going to be placing this morning, there's going to be at least two of them, are for educational purposes only. And let me show you where you can get in touch with us here at Tradactive. It's on this website. And we have here special section that was created for the notes that I usually post. So whatever notes we do today, I'm going to be actually posting it right there. And you can actually enlarge it. We also have a section here. You would need to log in and ask the question. In the past, I was posting my option session notes right here, but there wasn't ability to post the actual the screenshots. So I found that with Jose's help, this is so much better. We have created this Excel sheet that you can actually click on and get all the information. So again, the trade is broken down here in details. Over here are the Thinkorswim snapshots. Over here is a top snapshot of what the trade actually was filled. Explanation of the how much credit was taken in, how much was being risked, and of course risk graph. So once again, the notes that I will be doing will be present right there, and you will be able to see that. So the agenda today is actually very simple. We are going to go over the big picture of what the market is doing today. And after we are done looking at that, we're gonna then proceed to select the two trades. And I will share with you the Word document here so you will know exactly what I'm doing in terms of agenda for the next hour. So first I will go over the big picture of what the market is doing, and then we're gonna place the two trades. So the big picture comes first, and then two trades, and they're gonna be placed in a paper trading account with the Thinkorswim, and I will take a snapshot, I will take a notes, and then we're gonna do the conclusion and Q&A and everything. So good morning, Joe. Good morning, Mark. Good to see you all here. I really appreciate you being here. And we are going to start a little bit different in terms of the big picture because a lot has changed. And what I'm doing now is simply opening up the uh, the monthly chart of my setup here. And what I've done while preparing for it, I drew the line on the low of the February bar. So these are the monthly bars we are looking right here. And on every one of these, I have a point of reference, and this actually turned out to be exactly February 24th low. So as you can tell, as of now, we are in March stuck inside the February candle on a Dow Jones Industrial Average. However, what is interesting that last night when I was doing this, I really was quite surprised to see that it was only Dow Jones that it had a little bit of tail over the bounce, and you'll be able to compare that once one is all pulled up side by side. So you see over here, you're looking at the Dow having that little tail on a bottom. That means the buying pressure came in right here in this area. However, you would see right now that we do have a similar kind of tail on a SPY very little tail on a Russell and virtually no tail on on a QQQ, which means if somebody put a gun to my head and said choose the one to go bullish on, I would definitely consider Dow Jones Industrial Average to be the strongest of the weakest. However, I'm not done with my analysis. I want to jump to the IWM and just point out something very interesting. And what is interesting with the IWM that represents the Russell 2000, which is the small caps, the January low coincided with the February low. And of course, similar to what we saw earlier on Dow, we are still stuck in a range as of now within a February bar. But what is different about the Russell versus all three other ones is that in February, that was a green bar. And I really want you to kind of be aware of it because as the market was creating here lower low between a January and February, lower low between a January and February on a SPY, and lower low on a QQQ in a January and February. On a Russell, first of all, we have not created a lower low. That right there is quite significant because if we haven't created a lower low and created the equal low, we can even make an argument that as of now, and again, this is a unconfirmed argument, that we are now making the somewhat higher low. Now, of course, we would need to make a higher high, and as of now, we are creating what kind of high? Well, this is called lower high. So I really don't think personally that there's a trade on IWM, but there is something worthwhile for us to observe, and that is if one out of these four ETFs, the Dow Jones, the Nasdaq, the S&P 500, and IWM, is going to break to the downside, I would definitely think that the one who is going to cross the border to the downside is the one who is the nearest to, and that would be the NASDAQ 100. So we have a very, very clear trend over here that we are creating the lower highs and a lower low. Now we have created what? Equal low right here, which is really interesting because, as I have pointed out to you, neither on IWM have we created that equal low, because as I was just pointing out to you a minute ago, we have created somewhat higher low, somewhat higher low, and on Dow Jones, somewhat higher low. But the one that is ready to go lower is actually the QQQ. So what do I mean by this thing? If I really need to summarize this whole thing in a one or two sentences in terms of the big picture, this is what I would say. So, diamond is definitely strongest. QQQ is the weakest. So that means if I'm gonna hit something bearish, it would be QQQ. If I'm gonna go bullish, I should go bullish on a diamond or a Dow Jones Industrial Average that has a 30 stocks, but not too many of them are technology, because obviously technology sector is being beaten down pretty bad. If this is making sense, hi Ahmed, I'm glad to see you. I'm glad to see that you're here. The question that I have here from Joe, which candle do you put the more weight on? The highest closing candle or the red candle with the higher high? Joe, could you get a little bit more specific? Because I show you four ETFs, so you're definitely referring to one out of the four. So take a moment to type this in, I can explain it, because for me, this is my bread and butter. And what I mean by that, these are my candidates that I trade on a daily basis according to whichever is strongest or whichever is the weakest, which means that I really don't need to trade all four of them every day. I just need to pick based on whatever the market is doing. if I want to be bullish or if I want to be bearish, right? So whenever you have a time, Joe, type it in, whether you meant for a diamond or you meant for a Q or you meant for the SPY or you meant for the Russell 2000. Then I can actually clarify that. So I'll just take a sip of water here and then I'll move on. So I mentioned one of my previous sessions that 20% of our activity produces 80% of our results. So 20% of our activity is going to actually be trading, but 80% is just kind of preparing for it and everything. So, Joe, on any chart, I would say right now, Dow Jones is the one that I really pay attention to. I put the more weight on it because if I really look at here, Joe, you would see that we are somewhat. Let me kind of make this a little bit more obvious. Almost like in the middle of the bar. So, Joe, if you can just focus on that one point, maybe it's going to be clear to you that one is unlike another, and that would be just like in that Sesame Street kind of song. One is unlike another. So Dow has already bounced about the halfway. Nasdaq or the QQQ is still close to the border, very close to go even lower. They just need one more bad news from whatever. IWM, yeah, it had a very strong month in February. It had a very strong month in February. It was closing in the middle. But look, where is it right now? Is it closer to the middle of the range of the March or closer to the lower? So I would say, Joe, in this case, on a diamond, I'm putting the most weight because it's just kind of jumping on me. Joe, another thing that I would suggest, whenever you have a chance, why don't you switch this from a monthly to weekly and do similar kind of comparison, and then maybe shoot me an email and say, Josip, this is what I'm seeing on a weekly versus a monthly. Am I reading this right? Because if you get this broad market analysis correct, it's opening up the opportunity for you to reduce less candidates in your watch list and just to become more intimate with trading the same four products day in, day out, day in, day out. It's like going to the same restaurant multiple times and already knowing what is a good on a menu. That's the whole reason of us continuously trading these. Plus, we know that these ETFs are extremely liquid. We know that they're extremely liquid. So if there's no any other questions, you'll just confirm it. So I would like to do the analysis of the SPY. Okay, so I'm opening the page. I'm gonna be then looking at SPY, and what I want to do here is just kind of go over. Let's start with the VIX. So I'm gonna just type in VIX, and in the current market condition, because as of now, Dow Jones is up about 280 points, Nasdaq is up 1.75%, which means it bounced pretty strong, and S&P is up about 47. The market being up would definitely mean that the VIX is coming down. As you can see, the VIX has been in a pretty wild range, but it's coming into the resistance right at this level. And it's kind of logical when it's coming to the resistance at this level that in that case, most likely there's going to be a slight little pullback as we are heading up. So we also have a lot of red unfilled orders at this level with institutional traders ready actually to change their stance. On SPY, we have a very, very interesting situation. We are in between on the 55-minute of the two zones. We're really like what I would say day before the Feds make announcement about interest rate in no man's land. This is just like a wait and see what is going to be. But what I really would like to now do, I would like to tie the big picture of what I was talking earlier about the Dow being the strongest and QQQ being the weakest by simply sharing with you what I did last night to make the things a little bit easier to comprehend my logic of that 80% of the activity versus the 20% of the activity that produces a result, right? So what I'm showing you right here, it says the Dow Jones, the QQQ, the S&P, and the Russell. And I have a word standard deviation, and I'm looking exactly at SPY for now. So if you're seeing right here on a SPY, I'm going to just kind of encircle. The negative standard deviation is 3, and we are currently at 7. What does these numbers mean? What those numbers mean is that I want to make comparison of 4 ETFs in relationship to the SPY. So if this is my measuring stick, if this is my milestone, then I want to compare everything to it. So in a moment on a daily, I'm going to look at the IWM, and I would look at the red standard deviation and where we are in the terms of the current. So if I now change this to IWM and start from the top to the bottom, this black line represents the 9-day exponential moving average on a daily. Okay, statistically, after about the 4 days of down movement, there is a possibility of a bounce. We are currently on a second day of that. We're currently on a second day of that, which is quite different than the SPY, because what was happening with the SPY, that it says a standard deviation statistically saying that we're supposed to have a reversal after about the 3 days, and we are currently on a 7. We're currently on a 7. So when you're looking at these two things, you're like, well, in this case, we have a very unusual situation with the war going on, in which part of the world. But if there's one of these that could move up, and I was already pointing out to you earlier when I was looking at the bigger picture, there is a chance that the IWM that is creating as of now the higher lows could cross above the 9-day exponential moving average and go a little bit higher. But we are not done with our analysis. We're just noticing that IWM in relationship to the SPY looks way better. But we are not done. We also have a diamonds. And I'm purposely skipping the QQQ because the QQQ has been in such a downtrend. And if I'm looking for this relief rally to the upside, and especially on an up day such as today, I shouldn't be trading the weakest of the 4, meaning the QQQ. QQQ, I'm gonna color it in red. Should be a hint. Yeah, okay. If it bounces up, maybe I should short it because it might revisit that low of the February 24th. But I want to right now dismiss the whole concept of doing anything on the QQQ. I do not want to do anything on the QQQ. In fact, what I want to focus on right now on the diamonds and see how the diamond is looking in relationship to the SPY. It doesn't look that different. It doesn't look that different. But let me show you because the charts speak way louder than words. So I'm typing the diamonds and I'm showing the current one cannot even show it, right? But if you count these dots for the 7 sessions, we've been hanging below the 9-day exponential moving average. Today, we don't know yet if we're going to actually close above or not. So I'm going to just quickly show you something here. It's actually a FinWiz website that helps kind of to gauge what the market is doing with the click glance. We have a gap up on a Dow. We have a smaller gap on the NASDAQ. and we have a gap on a SPY. But what is interesting on every one of these two things, you can look at the high of the first 10-minute bar, and you will notice where the current price is in relationship to the high of the first 10-minute bar. So, of course, the one who got beaten down the most ended up rallying the most, and that is NASDAQ. But we already said we're not going to do the NASDAQ in terms of the trade this morning. We are going to do something else, and I'm actually considering going long on the Dow Jones Industrial Average, because as you can see, depending where the price action closes, there is a high chance that we might be closing above the 9-day exponential moving average. And if you want to just focus on that piece of information, that market generated data, you will notice just by looking at that, is a SPY above the 9-day exponential moving average? It's below. So answer is no trade in that. Where is the Q? Well, it's unnecessary to say it because it has a lot of space to travel before it can even get to that 9-day exponential moving average. And then the last one, but not the least important one, is IWM. And IWM similar to the QQQ has a space. So if once again somebody is really forcing me, pick the trade, pick the trade, pick the trade, I would definitely pick the trade on a diamonds going bullish, targeting this area, So if this is clear, feel free to type in the chat box that you get this, because what I'm going to do next, I'm going to be actually looking for a strategy using the top platform, top Tradactive option P planner, by simply putting the mouse at the high of this red UFO of the 55-minute, single right clicking, going down here where it says ascend to, and I'm targeting this area around the 3660. The reason why I'm doing this is very simple. There's way too many option chains, option cycles for me to select. So rather than me selecting, I have a technology right here called Tradactive, and this top Tradactive option planner is going to spit out the most important step for me, which is a cycle. I will already work on a strike prices. That's not an issue. I will probably picking like a target 37 or something like that, but I need to know where to start. So I'm clicking here 3660 strategy builder, and I know there's a lot of information that it's getting thrown at us when we pull this up. I know, but there's a one piece of information that is more important than anything else, and it's this. So the target date that we're looking is what? March 24th. March 24th. So I can now start building my my trade by saying I want to pick the March 24th. So that's the first part of the analysis. The second part of the analysis would be actually to figure out what we are going to do in terms of the strike prices. That is connected with option tactics. Now, I will just float this so I can revisit the chart. I can revisit the chart and entertain the possibility. If we continue going higher, on the diamonds, because as I pointed out to you, we are already creating higher lows, I would think that the first level of the resistance will be somewhere in this area. But taking into account that the implied volatility is currently pretty high, should I be then buying option or should I be then selling options? Feel free to type it in. By the way, on this volatility comparison, the blue line represents the call activity, gray line represents the put activity. So we can build a spread that is bullish with the puts, and we can build a spread that is bullish with the calls. So we can definitely choose to place the trade on the diamonds. Okay, two trades. I'm going to tell you, the second one trade is going to be, believe it or not, on Tesla. But that's a second trade. Let's do the first thing first, right? So I want to do the diamond trade, and I want to give you a choice to pick between the bull put, which would mean I'm using the high implied volatility, or I can do the bull call, but that would be a different environment. That would be then low implied volatility. So although I have two choices, for all the practical purposes, I only have a what? One choice. So Mark, is that clear? Actually, Mark, you're dead on. Sell option when implied volatility is high. So then you know that you have a choice, but only one choice is the right choice. So this is what I'm trying to point out to you, that you can choose, but the choice is now within a bull put. Do we have a number of things to choose from? Yeah, we have a different strike prices. I can pick out the money, I can pick it out of the money, or I can pick in the money, which is a little bit more aggressive, right? And we'll work to that. And this is pretty much where I need to actually bring back this and point out to you, do not now look at all these other possibilities, such as bull call spread. They're irrelevant to us. Do not look at the long call. They're irrelevant to us also. So what we need to really pay attention to is only this section right here. And what I'm going to do now, I'm going to actually take a just quick little snapshot, because I found that less information, it is easier on my eyes. It's easier on my eyes. And if it's easier on my eyes, it's probably easier on your eyes as well. So what I'm doing right now, I'm actually dumping just that little section that I have copied right here, so I can see what is going on. So we have three choices, as you can see right here. And I'm really happy that we only have three choices, because it's easier for me to explain it. So first choice is a 10-point wide. Okay, so that 10-point wide involves us buying the 320 call and then selling the 330 call. Okay, that's this very first choice that you're seeing on the top. So now I'm moving on to the next choice, that is a 5-point wide. Okay, this 5-point wide still has a buying, but it's buying of the 325 call and selling the very same one, 330 call. Oh, I'm sorry. It's the other way around. These are all puts. I don't know why I'm using the word call when I'm talking about the puts. So this is a put. This is a put. My bad. I mean, it says right there bull put. I just misspoke. Sorry about that. Okay, and this one is also 10 points wide. So this third choice is also 10 points wide. Okay. So on this one, what is going on, that I'm even more, so I need to have something, right, before I can sell the put at 335, right? So be aware of it, that two are like each other, but the one is a little bit tight. And of course, that means there's a less outlay of the capital, right? So on this one, we will be looking at the outlay of the capital of about the what? $500. On this one, each of these trades would be tying up $1,000. Tying up $1,000. Okay, so be aware of it, that although these two trades are different than the one that I'm gonna now make sure that it's not bolded, are the 10 points wide. Now, what is the one thing that is missing? But one thing that is really missing is information where the current price of the diamond is. So diamond is currently trading at 333.61. So if the diamond is currently trading and don't worry about the penny there. At 333.61, we are observing that in that case, um, this situation might actually work quite well for us. Let me now do something here quickly. I'm going to go into the Thinkorswim platform, and I'm going to be looking at different cycles and a different volume. And in order to do that, I want to select the activity for the right cycle, because notice I have gotten here the strike prices, but what is the time frame that it was projected? The time that was projected for me was May. That doesn't mean that I want to be in that particular trade till May. That does not mean that. All that it means right now is that I need to, let me just log in here in a second, that I need to select the strike prices from the Tradactive option planner that are matching, but we will hit that target, as I was pointing out to you, most likely by what? March 24th. So because this says to me May, it doesn't mean that I need to pick the May. From this activity, all that I needed to do is just select the three choices and figure out which one is the best. And later on, I will point out to you, I will look at this right here in terms of the credit and debit and figure out which one works the best, but I will not do this right now because I'm not in a right cycle. If that is clear, Mark, Ahmed, Joe, or whoever the attendee is, just type in quick, yes, I got it. So I can then proceed. So let me just pick one of the accounts here that makes sense. Okay, this is a pretty decent account. This is just a paper trading account. Okay, let's use the one that has the less balance. I'm using this with the $5,000 balance, so I will not overtrade in this account, because this is an account that we can actually do this, and it's not delayed data. It's a live data. It's just in a simulated account. So one more time, the Tradactive option planner was showing to us ability to pick something before the March 24. So I'm looking right here. It says on March 25th. Okay, then I can pick this one. So March 25th is the first one that we're going to be entertaining, but be aware of it. We need to now select volume and open interest to even consider on the put side those particular strike prices. I'm going to ask for maybe like 20 strike prices so we can be looking at these strike prices. So the strike prices that we had was the 325, 330, and 335. These are the strike prices. Okay, so I just want to make sure that you're following this logic. Volume today is just activity today, so do not misjudge something on a volume today, because what matters more is actually outstanding contracts that need to be exited, because as of now they are open. So for 325, do I have a triple digits that are looking pretty good? For 330, do I have a triple digits that are quite big? Because over here you have a 100, 100, 199. We have it. And then for 335, I should have moved this a little bit lower so you can see it. We also have a triple digits, but be aware of it. If I would now get rid of the volume and just go to the intrinsic, it will be clear to you that as we are approaching the 335, right? 334, 335, and we're currently at the 333, right? This would be aggressive trade because we're looking at what? In the money. Oh, I lost you here. You were doing good up to this point, but now I got confused. Now I don't know what the heck you're talking about. Okay, this is then in the money. Okay, this would be what? Out of the money. And everything is in relationship to what? To where we are. And this is also what? Out of the money. Okay, so are you following me on this? So here I do not want to make. What do we decide? We want to actually trade March 25th. So March 25th is what we want. So we're going to be trading the bull put for the March 25th using these strike prices. Now, I personally, if you ask me, I would prefer to do this one. And I'll defend my thesis why I would pick this one when I pull up that information. So one of the easiest way to engage the attendees in this whole thing would be simply to fire this paper trade in and then to work the way around it. So I'm clicking here, 335. I'm going where it says a sell, vertical. Of course, they're going to give me the wrong number. I purposely keep this on a 10 contract, so I teach you to slow down execution. Slow down execution, bring it up. Of course, you can automate this automatically to be at the single contract, but I want to make sure that when you do this, you pay attention to your breathing and you're actually able to do this. So I'm going to ask a credit of the 370. So I can actually walk you through this, and I'm going to click here and I'm going to confirm it. And then I'm going to come back over here, show you that it's sitting in account as a working order for 370 while the living market is at 357. I don't want to pressure. I want to actually walk you through this and explain it. In this particular trade, out of the $1,000, they only want to keep the $630 because they owe me 370. They owe me 370. Okay. So now that you understand that concept, I am putting out of the account that currently has, and I think that's the account that has about $5,000. I'm putting in $630 of the buying effect, right? So which is kind of acceptable. Okay. Of course, I'm not getting filled on that, so I will need to drop this a little bit, right? So I'm gonna drop it to 65 cents and see if I can get filled on 65 cents. I'm going to work for this for 2 minutes. And in the meantime, what I'm going to do, I'm going to spell out what we are doing here. So we're doing the bull put spread because it's high implied volatility. We're buying to open 325 put. That gives us a right to sell something against it. And we are selling in the money 385 put. So having said that, this thing is not doing anything. I'm going to now go down to the 50. Confirm, send. I got filled at 355. Okay, so let me show you the beautiful thing. So nothing is working. One is filled. It was filled at 355. So let's now walk through it. Okay, what was the first that I was asking? 370. What did I do after about 2 minutes? After 2 minutes, because those 2 minutes are enough for all the 7 exchanges to see that I'm not getting filled, I drop it down by the 5 cents, and then I got filled at 355. So now I know all this information. Because I'm risking right now $645 to make a maximum profit of the 355. Okay, so let's do that now on Trade Active. So what do we do next? We open up the chain. Oh wait, I should just do one quick thing here. I should take a snapshot of this filled order because it needs to give me the information about what is the price that I got filled in. So here it is. I'm just snapshotting this. I'm going to put it in a document here. I no longer need this information, so I can dispose it later, but the bottom line is what I needed out of here are the strike prices. What I needed out of this um, Trade option planner was expiry. Once when I have gotten that expiry, I have utilized the strike prices and I have built trade. So if that's making sense, Mark, Joe, Ahmed, or whatever the attendee, please just type in I got it, or put an X, so I know that you're following. Okay, now I can even dispose this because I'm done with this trade. All that I need to do now, just go in option chain. So I'm going option chain. I'm selecting now option chain for the, not what they give me here, May, but March. And then when I go over here, the strike prices, I will now ask the strike prices that involve 335, and it's going to highlight, and also 325. So you will notice that I have two of them that are highlighted. So these two that are highlighted are the ones that I need. So obviously you're looking right here. This is a 325 and this is a 335. Okay, so what do we do next? We actually enter this bullish trade by selecting the bull put spread. When it loads up over here, we will need to alter the few things. So we said we're doing the March. One put is being bought. Put that is being bought is a lower one, which is a what? 325. 325. Okay. Now that I have information where I got filled, I can actually type that in and have this thing on a risk graph, and then I can take a snapshot. So 335 I got for 660, 325 I got 305. So 305 and 660. So these are the strike prices that I was filled. When I go over here, edit the spread, you see that everything adds up, everything is correct. So now what I'm doing here, I single right click and I go to the risk graph, and actually I show you visually how the risk graph looks of that particular trade. This is very important piece, and this is a piece that I'm going to actually copy it right now, so you would have that just like I made last time in that Excel sheet information. I'm going to now have it as a template. So as a template. So as a reminder, after the live session is done, I'm planning to have for you the red line, which is actually selling, because if I was buying, then it would be green. The previous session, we worked on a short iron condor, which still works. Then we have an explanation how much money is there, and then we have a risk graph. So I'm almost done with this trade, so I'm going to just kind of hurry up here and make sure that I give you all the information that is needed. So I have this. I need to now copy the risk graph. So here's the risk graph that I need to copy. Just a little bit. Actually, I want to capture also the numbers, so you would have that. And last thing I'm going to do here before I move to the Tesla trade is actual layout of the what was traded. So what was really traded, just like I had in this one, that it says short iron condor. Last time I kind of cut it without the short iron condor, then I had to rebuild it because it's really important that the option tactic is spelled out here, so you know what option tactic I'm doing here. So in this case, I'm doing the bull put spread, and I was filled right here. All this other information is relevant, but right now, when you're learning, it's better that you have a less information, so information that you have, you actually understand. So I'm cutting it off right here where it says that I got filled at the 305, and I actually received back $6.60 in it. So all this is going to be after the session, nicely placed in that Excel sheet, and you'll be able to understand it. So before I move to Tesla, feel free to ask a question. It doesn't take long to execute the trade. It does not take long to execute the trade, but basically there are four components that I need. What was the time when I got in? It was at 8:38. Okay. What was the structure that I placed or a tactic? It was a bull put spread. How much was I risking? I was risking $645. In reality, I was risking $1,000, but they owe me $355. So the broker, as of now, at this very second, the broker is holding. It says a buying power effect is $1,000, but in reality, mathematically, they're holding only 645 because they gave me 355. So therefore, the most that I can make on this trade is what? 355. But what would need to happen? The price would need to lift where? Above 3335. That's mean Dow Jones would need to rally only another 200 points, and it has how many days? Today is March 15th. 2050 has 10 days to rally up. 10 days. You think the Dow Jones can move up 200 points? It could, but also be aware of it that I do not expect this to go any further, because when it hits that level, I want to exit. So quickly here, let me just place the opposite order. Opposite order means when we hit 335. Okay, so price rule at the market, time in force, good till cancel, trigger when the Dow is at or above 335. Go ahead and exit me. So I go over here, confirm, and I don't rush it. I take time to read it. So buy back entire vertical. That involves a 335 put that is right now in the money, because we're trading at 333. So that means there's $2 of the in the money in it. But if we go to 335, and that's where those UFOs are, most likely we're going to hit it and come right back down. But I just want to shave that little piece, right? At that point, I might not make all of the $350, like we'll know what it was, when the time comes. So when price is at or above 335, we're going to be out of it. Okay, let's move on to Tesla. Very good. Mark, you got Phil at 360. That's even better than I. Excellent. Good. So then your risk is less by $5. So that's 640. And make sure that you enter the exit, because a lot of times when the price reaches that level, we're starting to rationalize to ourselves, oh, this is good, it's going to go hard. No, we have this red unfilled order. There's a high chance that we might hit and go lower. So take money and run, because this is most likely where you should be exiting. So put the same orders that I did, and then report to me later. And again, we picked the Dow Jones because currently Dow Jones ETF, because currently it's above the exponential moving average. Let's look at the Tesla here. We have a Tesla that it's ripping, and I would look at the target here, 822. So same steps, single right click, go down where it says ascend to about 820 would be my target. So one more time, what am I doing here? I'm looking here at the 820, which is just before the zone. So if the Tesla is going to rally, most likely it's going to come to 820 and then turn around. So right now I single right click, I go over here, and I click. What is going to happen? They're going to give me a time frame. And it's the same time frame that I got before, which is what? March 25th. So I'm going to be doing the March 25th. But then what else can we do from this particular top to the active option planner that we did before? We can look at the what? Bull put spread. And which are the bull put spreads that they're giving me? 10 point wide, 20 point wide, and 20 point wide. So have these choices. And let's now type this in so we keep it consistency here. This is going to be a little bit faster than what we did before. So just like I had this right here, 10 point wide, 5 point wide, 5 point wide. On a Tesla, I'm going to do the same thing. On a Tesla, I'm going to do the same thing. But on a Tesla, we had one of them that was a 10 point wide and one of them that was a 20 point wide, right? So to keep the thing simple, I'm going to just print screen this area right here. And I will not make a mistake typing the call because we're dealing with the what? We're dealing with the puts. So now when we are over here in our section, I can just go quickly through it. Okay, so 10 point Y would be the one that involves 790 and 800. So always buying is a lower one, selling is a higher one. So that's a 10 point wide. The other one is a 20 point wide. So this is now the 20 point wide. The 20 point wide still involves buying of the 790 put, but selling of the 810 put. So that would then risk not the $1,000, but what? $2,000. Oh, this is also 20. Okay, so we only have a one that is 10. Okay, then let's make the not bolded the one, and now we can compare these two, right? So over here, what do? We're actually, I'm sorry, that's supposed to say plus right here. Okay, so we're buying 770 put, and we're selling the what? 790 put. So here's the one thing that I want to stop and ask you a question. What is the most important piece of information that I'm missing here? Hint, hint, hint. Why did I put this in yellow? You cannot build an option trade without knowing where the underlying that you're trading is trading. 794. Well, let's say 795. Okay, now it's stop exactly at 795. So if I now know that Tesla is trading at 795, let's revisit this. Oh, it's already open for me. Perfect. Okay. Picking the 800 is $5 out of the money. $5 out. Now it's $6 out of the money because this is changing, right? So we would then need to expect that 800 would be in the money, and it would be what? Aggressive. So you have in the money, then this one is even more in the money, and this is a conservative one. So this is the one conservative because we're sitting where? At 795. Okay? So if somebody said to me, okay, you only have like 5 minutes left in the session, quickly choose one, I would choose the one that doesn't need to do anything. The one that doesn't need to do anything is which one? Feel free to type it in. Which is the one that doesn't need to do anything? Okay, good, Mark. I'm glad you type in your exit order in because I have this daily affirmation that it says, I trade for a living. I'm an excellent trader. As I get filled, I enter my exit as the opposite trade. That third sentence is probably the most important sentence in my daily trading information. I trade for a living. I'm an excellent trader. As I get filled, I enter my exit as the opposite trade. I know we're dealing here with out of the money, and you're going to see we're going to place this out of the money thing. But if you forget that third sentence, as I get filled, I enter my exit as the opposite trade. The worst possible trade is one that was a winner and then later on became a what? Loser. Those are absolutely the worst possible trades. Absolutely the worst possible trades. Okay, so notice over here I have highlighted the strike prices that I'm looking at the put side to trade. So the strike prices are not on the call side, they're on a what? They're on a put side. Specifically, I'm dealing with 770 and 790. Okay, but the one piece of information that I'm missing is where did I get filled? Well, I will know that in a moment. So I'm going bullish, bull put spread. I will need to edit that spread one way or another, so you don't need to be too much concerned about it. So be aware of it that the one that I'm buying is actually 770. The one that I'm selling is 790. That doesn't need to do much. Just need to stay. So now I'm going to click OK. Of course, they're going to take the current prices, but we'll see what the current prices are now in a moment. Okay, so here we go. 790 selling. Very cool. Of course, they're going to put below the price that I want. Now I need to click up to go to what? To single contract. I'm getting about, and let's not get filled right away. Let's ask for something around 860. Okay, so be aware of it. This is a $20 spread. Therefore, I'm risking $1,140. Is there a piece that I didn't do yet? Feel free to answer it, yes or no. So I'm going to save this. Yes, there's a piece that I didn't do. I did not check the what? Open interest. So here's open interest on the one contract. I need to also look at open interest on another contract. Interesting. I can actually reduce this to maybe this one. Well, let's add the volume too. So we'll see which one. Oh, okay. You know what? I'm going to keep it at 770. It's good enough. Okay. My saved order is right here. This is my put for 860. Create a duplicate order. It's saying at 860. Most likely I'll get filled. Fire it in. 1 Mississippi, 2 Mississippi, 3 Mississippi. I know we need to finish this in a few seconds here, but because this is paper trading account. I'm gonna just show you what the current market is on it. Yeah, enlarge this so you guys can see it. Current market is on it is at the 853. Cancel and replace. Let's bring it down to 853. We said. Let's see if you're gonna get filled. 853. I got the price improvement. I love that. I was willing to take 853. Okay, I don't know if you notice here. I was willing to take 853, but they gave me what? 860. Because that says limit or what? Better. You just can't sell me for more than less than 853, and they gave me 860. So this is good. So now I'm going to take a snapshot of this, and I'm going to put it in that Word document. So you might have two trades rather than just one trade when you click on this Trading with the UFOs Josip. You're going to have there two of these trades. One is going to be diamonds and one is going to be the Tesla trade. So here we have. Why do I need that information? So I can type in and then create a risk graph and have a snapshot. So The session is going to go just a couple minutes longer. So please be patient here with me because I want to make sure that I got all the pieces together. So I go edit the spread. I change this to the fill, and I got filled on 770 for $27.10, while on one that I'm selling, I got $35.70. So think about this. This right now, it gives me 860. Okay, 860. So let me just take that snapshot. So we can say that today we were working on the two bull put spread strategies. One was on the diamonds, one was on the Tesla. We will have a same four pictures in it. So just like we had the red one with the bull put spread, we are now missing the what? Explanation what this is, but I can't get this unless I take a snapshot of what? Of the risk graph. And how do I get the risk graph? You simply put the mouse right there where it says the buy and sell of that particular bull spread that you have already edited, put the correct strike prices, put the correct expiration, fill in with what market did give you, and you go risk graph, and when it loads it up, this is where your eyes should go instantly, right there. In fact, we even have a little triangle here, so you can see it and collapse it. But in this case, I don't want to collapse it. I actually want to do opposite of collapse. I want to enlarge it. So the most important piece of information is right here for me, and we need to put that in. And what else do we need? Oh, we need the risk graph. So here's the risk graph. So I'm going to make sure that I take this risk graph in such a way that it has all the time. And okay, I actually don't like where my mouse ended up. I'm going to move my mouse aside, so I'll take that picture one more time. Feel free to type any last minute question, otherwise I'm going to be closing the room. I hope this was a good session. We traded the two things. We started first by looking at the big picture, and we concluded after looking at the big picture that the Dow was the strongest. We then proceeded to place the bull put spread on the diamonds because implied volatility was high. After we have done, we know that the QQQ is the weakest, but the strongest of the weakest of these Fangman plus T, that's for Facebook, A, Amazon, and Fang, right? That would be Netflix, G, Google, man is what? Microsoft, A is Apple, N is Nvidia, plus T is what? Tesla. Well, obviously Tesla is not really in technology, but it is in what? Car industry technology. That's why we picked it, and we looked at the chart, and chart was ripping to the upside, and we concluded that we can place the trade. Right now it's taking a little bit of the breather, but anyway, what's the one more thing that we need to do on this one? Same thing that we had on our or a diamond, which was a closing order. We need to have a what? Closing order for this one. But this is a little bit tricky because aren't we already at 790? You see, that's kind of a thing that I want to point out to you, that you do need to go back to the chart and you need to see where is the possible level of the resistance. So if you would connect these dots from the top to the bottom, from the top to the bottom, what kind of trend would we be observing? What kind of trend would we be observing? Uptrend or a downtrend? From here to here to here. What kind of trend would we be observing? Downtrend. Oh, Mark, you got filled better than I on both of these trades. You got filled for 885. You see, it pays off to be patient, and be aware of it. I'm actually trading here in the paper trading account. But then when you look at this high right here of where we reach, that would be about 800. So I'm gonna select this 800 right now. It might get hit today. I wouldn't want you to do that with the small account that has $5,000. You might get dinged as a pattern day trader. So, what I would suggest to you after the market closes today, you single right click on this. Okay, you single right click. Make sure you select to create opposite order because now it's flipping it. Time in force is going to be what? Day order. No. Good till cancel. Limit is going to become a what? Market order. So when the market closes, what you can do, you can actually go ahead. Oops, sorry. I was supposed to put this in and have a condition here that when a Tesla is at or above, and then you would type in the number that what you want, right? But don't do this right now. Like do your technical analysis. You might say, well, we already reached 800 tomorrow. There's a high chance we might go maybe 810. The higher we go, less money are you buying back, which means more you're keeping. So this is pretty much where I'm going to end the session with you. So one more time, thank you once again, and I am going to see you um, next Tuesday. Have a good day and stay hedged. Bye.